a beautiful day to kick off the Boston workshop. We're going to be spending 2 days inside of this hotel, and it doesn't really matter that it's nice outside. If you're dedicated enough and if you want it bad enough, find a coach. You do whatever it takes to learn stock market fundamentals and get a trading plan in place. So I'm looking forward to it. I met with the guys last night for a little bit of welcome drinks. So now let's go inside and get started. Hey guys, it's been a very busy past week or so for me. I've been traveling. I just got back from Boston, literally just walked through the door, and it's been very busy, but the Nasdaq 100 is giving us something to think about, and I'm seeing a lot of very inaccurate or at least weird analysis out there in the market on the large cap tech stocks. And so I want to walk you guys through this and kind of see if we can gain some perspective on where I think what's going to happen here. Have they topped out, these large cap tech stocks like Apple, or what's the deal? I bought a new drone. I've had a drone for some time. If you remember, in this YouTube channel I did a little bit of drone footage a while back, but they keep like malfunctioning. So I think this one actually should work, so stay tuned for some more drone footage. So let's have a look at a couple charts, guys, and see if we can't make sense of what's going on in the Nasdaq 100 on these large cap tech stocks. All right, so by now everyone's heard about that sell-off on Friday to June 9th in large cap tech stocks, Nasdaq 100, and ever since that I've been hearing a lot of interesting analysis. Some people are already calling these stocks topping out. I don't necessarily I think that's the case, but I think there's something else going on here that we need to be aware of, and really we need to respect it. So first of all, let's keep in mind a little bit of multi-time frame analysis. Nothing complex, but something that the pro investors do and a lot of retail investors don't, which is pretty much probably why it works. So let's have a look at the Nasdaq 100. And you can see really all we've done on that drop on June 9th, and with a little bit follow through selling on the 12th of June, was you basically got rid of some really overbought conditions. We got the Nasdaq 100 back to its 50-day moving average. That's that yellow line. You can see that yellow line has been acting as support back in April. It acted support in December of 2016, and then before that it was a little bit choppy. So that's an interesting sort of thing to note. Let's have a look at, before we look at some single name stock, let's look at the weekly chart though to give us some perspective. So from a weekly chart perspective, you can see we had an outside week take place the week that finished Friday. What did we say? June 9th, I guess. And that's kind of it. We have no real follow through selling yet, even from a simple trend following perspective. Just drawing basically a very simple trend line here is starting from, I guess, last December or so. And you can see we're not really breaking anything. All we did is we got overheated here coming into late May, and now we're basically back in the middle. So that's a little bit of what's going on here. Now, one thing that's a little bit more concerning, however, is what we're seeing in terms of the Nasdaq 100 divided by the S&P 500. If before you start clicking and hit a stop button here and think it's too confusing, this is giving us a little bit of what we call the relative picture. And from a relative perspective, you can see the Nasdaq 100's weakness last week, or particularly last Friday, is more pronounced than the absolute weakness. So visibly you can see that's a pretty ugly red arrow, or red candle I should say, that took place on that Friday, June the 9th. And from that perspective also you can see we haven't really done a tremendous amount of damage, but we have kind of broken the uptrend. So those are a couple things to keep in mind here. Now, do keep in mind at the same time that the bigger picture trend hasn't changed in the absolute terms. So this is what's causing us to maybe take a step back from these kind of stocks, but not really freak out and sell out of them. So let's have a look at a couple single name stocks in the space. Apple, of course, being the largest one in this space. And here too, you can see, yes, we sort of stopped the upside momentum in early May, then kind of trotted sideways, and we saw a little bit of follow through selling with that move that took place in last week. On the daily chart, you can see the same thing. We're starting to break some initial trends here, but really all we've done is mirror back to the 100-day moving average. There's nothing really catastrophic just yet. Here too, we're just kind of coming back to a support area somewhere near the 140s or so. That really is probably better support than anything else at this point. Now, I'll tell you that what I'm starting to see in a lot of conversation I'm having with money managers, hedge funds, and other institutional guys is that they're looking to take some profits in these names, but not really sell all out.
So what I'm starting to see, and this is something I've been talking about with my Clubhouse members for the past couple of weeks, is really more of a sector or group rotation than anything else. So I would not at all be surprised. In fact, this is kind of my base case right now to see some money rotate out of the Nasdaq 100, Apple's, Google's, all these names that remain, in my opinion, overextended through a multi-month lens, and start moving into things like small capitalization stocks and maybe even biotech stocks. All right. So rather than an all-out sellout, I think this is a little bit more of a sector and group rotation. So what do? Well, from a Nasdaq 100 perspective and Apple, I think this is an opportunity now to give this stuff some breathing room. And once we have a clear washout and a bullish reversal, which we've not yet had as of today, I think one can go back in and swing trade these stocks, maybe the Nasdaq 100 back up to 144, maybe something like Apple might be able to get back up to those highs around 155, maybe even 160 ultimately if we see some follow through. So that's how I would approach it. At the same time, though, I would understand that this is probably more of a sector or group rotation than an all-out sellout out of these large cap tech stocks. One stock that is sort of related in this, just because all the correlation is very high between these sort of large cap tech stocks, Alibaba. And Alibaba right now, you can see, has kind of had the same thing that we saw in the Nasdaq and some other names, except even more pronounced. You can see that the Nasdaq 100, or excuse me, Alibaba, has essentially overextended itself out of this uptrending channel. If I could draw it, looks something like this. All right, that's kind of your channel here. And we've kind of just overextended. So now there's an opportunity to maybe see some mean reversion. So I'm actually going to use Alibaba in conjunction with maybe Apple and the Nasdaq 100, all three together, to see if we see a little bit more consolidation to the downside. Alibaba has probably better support around 125, about 8% lower from right at this moment. You can see the stock is somewhere near 136, 137. So that's what I'm seeing here. Large cap tech stocks, I don't think it's a time to freak out. The trends remain intact, but I do think the underlying theme is one of sector or group rotation. A little bit of money is going to come out of those large cap names. So I think that the overall momentum will probably, or the trend will remain intact, but the upside momentum is likely going to be a little bit faded. So I hope this makes sense, guys, and I'll see you in the next video.